Valuations is something which has been a cause of concern, not just in the primary markets, but also SEBI now jumping into phrase saying these exorbitant IPO valuations will be looked into. What does it really mean?
So Shweta, first we need to understand how a company's valuation is decided for the purpose of the IPO. So they have a bunch of banks, so we call it book leading managers, building managers who, on the basis of their results, it's called a discounted cash flow method. So they'll predict their cash flows going forward, let's say 5, 10, 20 years, and they discount it back by the prevalent rate of interest and they get a valuation.
Present value of future cash flows.
Right. And then again, Kartik, it's based on a lot of estimates. That's why when we see, recommendations on certain stocks, so 10 analysts will give buy call, 15 will give sell call, 10 will be on hold. So why is that? It's because of estimates. The another factor that they consider is, what the overall industry valuations are. For example, if we take Tata Tech was, coming out with a valuation of about 32, their, 1 year forward PE, whereas KPIT Tech, its closest competitor, is currently trading at about a valuation of about 80x PE. Right. So, industry comparison is obviously done, discounted cash flow method is obviously taken consideration into, but again, the the entire argument comes back to how are these valuations decided for the for the public in general.
For the listing.
See, ultimately, we have seen instances in the past couple of years where a certain, number of companies have come out and they have, come out with a particular valuation, and, when they actually came out with their IPO after receiving probably a negative response from the market, they do cut their valuations by 30 to 40%. So 30 to 40% haircut within a span of 12 to 14 months does not really make sense. 5 to 10% adjustment we can understand. Perhaps there is that estimate adjustment that we were talking about. But then 15 to 20% or 20 to 40% adjustment from your internal valuations to now the IPO valuation that you're coming out with. How do you explain that?
My concerns is not so much with institutional investors, but retail investors, the common man, which every time it sees an IPO thinks it's an opportunity to make that quick buck. And they often get into IPOs without going into much of research, which is not advisable, by the way. But it is a cause of concern for the retail investors specifically, who perhaps don't know how to read the books of these companies as to whether they should make that investment or not.
Certainly, Shweta, and I think the call from SEBI is that they are trying to protect the interests of retail investors who who are just reading those names, reading those headlines about subscription data. For example, Tata Tech received 2.6 lakh application record amount. So just on the basis of that,
2.6 lakh crore, the volume. Yeah.
And I mean, basis of that, if you are making your investment judgments.
And what was the subscription? Oversubscribed some 70 times or something?
181
times, imagine.
And that was the case for all, 5 IPOs came out last week. 4 IPOs were oversubscribed by 60x to 180x. Right. Fed Bank was the outlier. It was subscribed by about 2x. Still 2x, right? Subscription, they are being oversubscribed. So, of course, there is a lot of interest from retail investors for these primary, for the initial listings. And SEBI is perhaps, trying to protect their interests and, asking the right questions. How are you getting to these valuations? There should be a certain mechanisms where, I'm not sure if the company would or would not disclose it, but there should be a certain mechanisms that should be put in place, or at least we should start the conversation about it.
All right, the conversation is in fact started now with Madhabi, Puri, Buch, SEBI chairperson speaking on record that they will be looking into the matter.